in our note, we highlight that the 2020 internet cycle is similar to 2012 and 2014 on a couple of points. I think first, if you're looking at the last cycle, we are transitioning from PC to mobile internet. And in this cycle, there's a structural change in consumer behavior on COVID, as well as the accelerating pace on digitization. So market is expecting quite a lot of news stories post-COVID. And secondly, that is the rising star story. If you're looking at the last cycle, there's a few rising stars with very fast earnings growth story, and they are having unique business model. And in this cycle, we are seeing something similar, that Pinduoduo, Meituan, Bilibili, as well as C Limited, they are also they are big caps, but they don't have very strong earnings growth because they are still in the investment cycle and just turn into break even. So we do believe that a market assign a premium to rising star, and the timing about on this internet cycle, when it will last, we do believe it will last until the end of COVID, because by that time, market will have more color about the structural change in consumer behavior, as well as how the digitization goes after COVID.
Yeah, the only thing is that we don't know when the virus cycle will play out and when we would actually see the end of things as far as the COVID-19 pandemic is concerned. Having said that, Thomas, I do want to get your thoughts on Alibaba. Do you think the next round of upside for the stock is really going to come in from Ant Financial's IPO and the sum of parts valuation that the business derives from that issue, holding 33% of the entity?
Yes, I think Ant Financial IPO can unlock the value of Alibaba, as we highlighted in our note. But I think there are a couple of things that Alibaba is also very attractive to investors. I think first, that's the online shopping recovery story. And second, that's the high margin for their core business, with their customer management revenue offer very high ROI to the merchants. That's on the Taobao and the Tmall part. And then secondly, they also have a lot of new business models, including the China, their cloud, their local service, and their new retail on top of Ant. So I think Baba has a diversified model coupled with strong execution.
Thomas, what about the competitive landscape, though? Because, again, if we're going to make analogies back to 2012, 2014, the competition in the core online retail business for Alibaba has changed dramatically, hasn't it? I mean, who stands to gain as we go forward on this front?
Yes, I think if we're looking at Alibaba, we are expecting that the company can add around 1 trillion incremental GMV for this year. So if we look at the size of Alibaba, it's already over $1 trillion by the end of this year. And on top of that, you are seeing the monetization models is also evolving from search advertising to recommended feeds, which represents over half of the traffic of Alibaba. But the monetization is still in the teens. So despite you are seeing a lot of different players entering into the space, the momentum or the fundamentals of Alibaba remains very strong. And having said that, if we look into live streaming online shopping, Alibaba is the #1 player in the field as well. So despite there are more players, the fundamentals of Alibaba remains very strong.